You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amberdata. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amberdata delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amberdata eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again for a little bit of the old Crypto Rundown, the program here on the network where we explore everything going on beyond our traditional stomping grounds. Not going to talk about VIX or Tesla or SPY options on this show. Nope, we're going to go a little bit further afield, see what's cooking in the realm of Bitcoin and ETH and everything else from a vol, from a Skew, from an unusual activity, all sorts of fun perspectives here on the Crypto Rundown. My name, of course, Mark Longo from the THE OptionsInsider.com. Reminding you of three things here at the top of the show. A, if you're just listening to the Crypto Rundown, we know for a lot of you crypto native folks, this is your vector into the world of options. So if you're just coming to the Crypto Rundown new, we see a lot of new ears popping in all the time. Make sure, A, you're subscribing to the full network. You're missing out on quite a bunch of other great content there, including a lot of great educational content. So if some of these terms we're throwing around like skew and volatility and all these things are a little bit new to you, check out Options Bootcamp, Options Playbook Radio, the strategy block segment of the Option Block. A lot of great educational content for you folks over there, but you have to get it on the full network. And then, of course, if you like what you hear at this show, anything else we do, throw a like, a star, a comment on whatever platform you get it on. This stuff's available on just about every platform under the sun where audio is available. So some platforms let you just throw a star. Some let you make ratings, comments, whatever you like. Of course, you can do it on our mobile app in the App Store there as well. All that new stuff. I mean, obviously, this network's been running for a long time, but the algorithms tend to favor the new stuff. So if you like what you hear, help those new people continue to discover the content. Throw a like, a star, a comment. And, of course, if you want more content in your lives, and who doesn't, of course, you have great questions about the world, maybe the intersection of derivatives and crypto. A lot of great guests have come through our Pro Q&A hot seat discussing that exact thing in great detail. In fact, I'd put it out there that this show and our Pro Q&A hot seats are the two places where really we've delved the most on the planet, probably, in terms of the intersection of the world of derivatives and indeed crypto, and more to come. Of course, great options oddities segments there every week as well. Giveaways coming up. It's almost Halloween. My goodness, it's almost time to give away the October Pro Trading Crate. Only one place to go to get your name in the hat for all that fun. TheOptionsInsider.com/pro is the place to go. As we keep on rolling let's roll out the old crypto hot seat for our guest. You know, it's been a crowded crypto hot seat of late, listeners. A lot of folks coming on the old hot seat. Everyone wants to come in and talk to you folks about crypto derivatives. Coinbase has been on recently, Deribit, eToro, you name it, the Origin Protocol folks, Enclave Markets just last week. It's been a crowded hot seat, but I am pleased to welcome back our guest. Haven't chatted with him in a while, since all the way back in the dark, heady days of February, late February of this year. Our old buddy, Mr. Greg Magadini, now the director of derivatives over there at Amberdata. Greg, welcome back to the Crypto Rundown program, sir. It has been too long.
Mark, happy to be here. Thanks for having me on again.
A lot going on, and we noticed since the last time you were on, sir, Bitcoin was way down at 23,500 the last time we chatted with you. It was on its way. It was trending lower, about to break almost 20K about a week or so later before this big turnaround, obviously, that we're in right now. So a lot to discuss. Let's get to it. A little bit of the old Bitcoin breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, listeners, welcome to the Bitcoin Breakdown, the portion of the show where we do just that. We break down all the action in the world's leading digital asset. We're talking about the big dog, which is Bitcoin, looking a wee bit bigger than it was just since this time last week, I should say. Of course, not to speak of the last time Greg joined us when it was 23,500. Coming into the start of the show today, 34,350. Man, we are trending north. You've seen all the articles out there now, listeners. Bitcoin 40K coming up next month. So the bulls are back. They have the bit in their teeth, listeners. On the show this time last week, the level was about a little bit north of 30,900, 30,904 to be precise. It puts us up a whopping 3,446 handles since our last show. So a lot of action out there. Of course, we did get north of 35K very briefly. It came last Tuesday, right after the show, listeners, 35,150. And then the low came pretty much right around showtime, actually, of about 30,098. So almost 1,000 handles below where we were during the show. So quite a reek out there. But before we get to all that fun, Mr. Greg, a lot's been going on since the last time you joined us out there in the old crypto hot seat. So let's start there. Catch us up. What's cooking? What's new? What are you guys playing around with? What are some of the cool new bells and whistles over there in the land of Amberdata, sir?
Yeah, so super excited to have some Delta One product features that we've built over the past few months. We've been also incorporating the CME Delta One product as well. So all the users of both our GUI and our API now have access to pretty robust Delta One offerings. So that's pretty exciting, futures and perps. And then on the options front, our gamma profiles, dealer gamma profiles on Deribit have been ticking along really nicely. It's been able to capture the directional flow of the ETH overwriter, which is something we'll touch on later, and the demand for optionality on Bitcoin. We've seen year to date, June was a big time for option demand from the street, and dealers were net short a lot of volatility. And same thing right now, we're seeing dealers really on the other side of this. And so there's a lot of potential for sort of a continuation of this move. And so it's been a really good tool. It's been tracking things very accurately. So really happy about that.
Now, I always joke when we're here on the show and we're parsing some of your data. I always joke that we kind of just have time to scratch the surface here. It's only really a 1 hour show. We don't have time to get into all the data you guys are throwing at the users out there. But I'm curious, we talk about a lot. We talk about, Skew and vol and all that stuff. But from your perspective, when folks are banging around on the platform, particularly on the options side, what would you say is the go-to, is like the number one tool that everyone's really mainlining these days?
Yeah, absolutely. So the typical ones that most people like to look at as an entry level is the term structure over time, and then a time series of the risk reversal skew. So basically call implied vol for say 25 delta options minus put implied vol for 25 delta options. So those are sort of the basic ones. Then we have our more advanced and sort of my favorite features, where we've essentially quantified the extent to which the term structure can go in backwardation or contango by looking at the relationship between the different maturities. So on average, when we're backwardation, what's the relationship between 7 days till expiration versus 30 versus 60 90, 180, so on and so forth. So this really helps us contextualize where the term structure is at any time. And then lastly, what I just spoke about earlier, the gamma profiles. That's something, these tools were actually co-developed with a friend of ours, Ewan Sinclair, and we're basically just looking at the flow and really understanding on Deribit how dealer inventory is positioned. And that gives us really good insight into sentiment, into potential hedging flows that might affect the perpetual contracts, so on and so forth, could affect the funding rates. And it's a really kind of a good way to understand what's the excitement and positioning in the market at any time. So those are the main tools that our customers like and that I personally like myself.
Our buddy, Mr. Sinclair, definitely one of the more colorful characters in the world of volatility, that's for sure. He's a fun one out there. Speaking of fun, listeners, a lot of fun being had out there in the world of Bitcoin vol. Let's get into some of it now. Of course, you folks can kick the tires and light the fires for yourselves over there. Amberdata.io, the place to go to begin that journey to the dark side. And we've been talking for a while now about the vol starting to get frothy, starting to get juicy again. Remember, listeners, when we saw Bitcoin and ETH vol dipping into the mid to high 20s, we were saying on the show back then, this doesn't seem like it's long for the world. And sure enough, that is indeed the case. Coming into the show today, we got your standard, your benchmark 30-day vol out there in Bitcoin, almost a 51.8 when we kicked off the show. That's pretty much putting it up nearly double from where it was not too long ago, listeners. And last week on the show, it was still pretty frothy at about a 47.5. Obviously, we are even up higher than that. We go a little bit farther out. We go out, let's say, 6 months on the term structure, see what's cooking out there, and things looking even frothier at about a 55 on the show. Last week, 57.1, up another 2.1 points on the week. So vol getting frothy. Greg, obviously a lot's gone on since the last time we chatted with you, but I think for a lot of people, they're really fascinated with this recent run-up over the last couple of weeks. Of course, it all started off with these rumors now maybe coalescing more out of the ether that we're going to see an approval on the spot ETF front has sent all of the crypto markets into a tizzy, has sent Bitcoin shooting north. So I'm curious for you, as you've watched all this unfold over the last month or so, what's really been catching your eye out there from a vol, from a skew, from a term structure, from all sorts of different perspectives as you're crunching all the data over there at Amberdata every day?
Yeah, absolutely. So I think kind of starting with maybe just a fundamental picture. So obviously the Bitcoin ETF, this is, a great tool that will open up a floodgate of institutional flows into Bitcoin holdings. That's the narrative. I think that makes a lot of sense. One of the other things that makes a lot of sense as well is that the regulatory picture around Bitcoin is a lot clearer than it is for Ethereum. So that also makes Bitcoin sort of a safer asset to own. But then really the thing that sticks out to me a lot is kind of the trend that we've seen in 2023, where Bitcoin is really proving itself to have a bid as a safe haven asset. This became clear with the SVB banking crisis, where initially SVB goes bankrupt or is insolvent, everything crashes, risk assets crash, and Bitcoin initially knee-jerks lower, but then a few days later actually rallies and starts decoupling from the performance of other cryptos such as ETH, and it's basically held on to that bid all year and has now outperformed ETH by about 40%. And so that's something that's been really interesting, and we're again sort of seeing that right now. So I like to think of gold as a safe haven asset in times of turmoil. And what we've been seeing sort of in the macro landscape is that despite interest rates going higher, gold's been strong and Bitcoin's been strong. And it looks like it's been strong in response to maybe some of the Middle Eastern conflict. And so that's kind of a really interesting narrative. And I think this is really a situation that's going to essentially prove itself to show Bitcoin continuing to outperform and have sort of this upside kind of volatility in terms of turmoil that make the skew of the calls a lot richer over puts. So two of the things that we're seeing right now is that in this recent rally that we've seen the past 10 days, obviously that's going to lift up the front end of the term structure. Right now, the term structure is pretty much flat. If I compare it year to date, we're versus like the year to date range, we're in the upper 75th percentile of all the readings. So this is kind of like an elevated vol period. And then outside of that, on the skew terms of the situation, right now, pretty much all expirations that we measure, 7, 30, 60, 90, 180, are trading about 7 vol points to the call side for a 25 delta call versus puts. So there's a lot of essential pile into upside calls. And so this creates really interesting opportunities. Crypto is known to be sort of a fear of missing out market, a FOMO market. And so right now, people are really underexposed and want to get long. So they're essentially paying a premium for these calls. And then there seems to be some put selling flows because the put skew is pretty flat. 25 delta puts versus at the money puts are essentially trading the same vols. So it creates really interesting times to do like risk reversals where you buy Bitcoin, you sell the call, buy the put. You can do a caller if you want to do a fully collateralized version of that instead of a delta hedge version of that. So those types of structures right now are really interesting and allow traders to take the other side of sort of the momentum of flow.
Yeah, a lot going on out there. The skew, and of course, you mentioned FTX. Hard to believe it's almost exactly a year ago, Greg, that all that implosion happened. It was November 11th of last year. So we were within a week and change of that now. So it's hard to believe. Lots happened in the past year on the crypto front, Greg. But you mentioned the skew, and you're right. That's been fascinating to watch. I know for a lot of our people who come to the world of crypto from the world of options, which is, of course, a lot of people on our network in particular, they're a little bit flummoxed by the way skew performs in Bitcoin and ETH. They're used to the traditional landscape of the equity skew where the puts are bid, the calls are offered. And when you move to the upside in an underlying, the vol gets hammered. And you move to the downside, the vol gets bid up. That's how VIX works. That's how people have just come to know and come to grips with volatility really these days. And then they come to a product like crypto, and all of a sudden we see protracted upside moves, and the vol is now exploding to the upside. The calls are getting bid, and it's just a funky time for all involved. Obviously, this is not a new phenomenon. If you listen to our This Week in Futures Options show, listeners, you'll see a lot of the commodity products we talk about there exhibit similar skew behaviors to crypto. They get bid to the upside sometimes. But a lot of people, for whatever reason, they have in their mind that traditional investment skew that you see in, let's say, the S&P 500 or most of your major equity options, and they're not familiar with this. So it kind of throws them a curveball. Speaking of curveball, let's get into some of that skew right now. Actually, before I crunch those numbers, Greg, skew has become an interesting phenomenon now as well because so many people are playing on the near-dated portion of the curve. I mean, you look at SPX and all the zero-day madness going on in the debate about 0 days in crypto and everything else like that. So a lot of people have a lot of different ways that they carve up skew. So when you're looking at skew, Greg, are you looking at the weekly skew? Are you looking at monthly? You're going out, 6 months? Are you trying to get some sort of daily approximation? Where do you fall from a skew perspective when you're trying to analyze it?
Yeah, so the way that I like to think about it is that in the short term, just like vol, the short-term skew really can reflect sort of the right now event. And then long-term skew reflects sort of the median relationship. So the thing that's really interesting about Bitcoin, when I look at it, I look at pretty much all 5 maturities that we calculate at the same time. So 7 days to expiration, 30, 60, 90, 180. And one of the things that's really interesting is that even though 2022 had a negative spot vol regime, especially in response to Terra Luna crashing, Three Arrows Capital, FTX, in 2023, long-dated skew just became positive and has held on to that positive bias pretty much throughout the whole year. And then short-dated skew has kind of done a bunch of different things. So in the case of the initial reaction to SVB, it went very negative by 10 points. And then it hung out between August to essentially up to this recent rally, was more on the negative side of things. But today, all 5 maturities are all hanging out at around plus 7 points for a 25 delta call, 27 vol points. So everything's kind of clustered together. So that's kind of really what's interesting. To me, if we don't get follow through right now of, say, 35K up to 38 or 40K, we're probably going to get a relaxation in vol. The front end will come back down. Short-dated skew will normalize back towards 0. And then that's probably what's going to happen unless we get some sort of follow-through because there's a lot of excitement. People paid up, and people buy the top in these types of moves. And I think right now that's really to be determined, so to speak. But short dated vol right now is the most vulnerable, whereas long dated relationships, I think makes sense that there's positive skew, because I think if Bitcoin is acting like a safe haven asset, well, in times of panic, people will bid it up, and they'll bid it up fast.
Certainly no shortage of FOMO out there in the world of Bitcoin. Let's see what the skew is reflecting. Well, let's go out 7 days for now, listeners. We can talk about getting even closer in a little bit, but 7 days for now, weekly skew. As Greg mentioned, kind of a good barometer for the near-dated sentiment for what's going on in crypto right now. Not a surprise that it's leaning towards the bullish. It has been doing that for a week and change out there now. It was a positive 6 on the show last week, coming into the start of the show today, almost a positive 8, about 7 3/4. So still getting frothier on the near-term upside. As Greg mentioned, that's kind of really just showing there is a nearly 8-point bias premium to the 25 delta calls versus the 25 delta puts out there. Again, if all that's Greek to you, quite literally, because we're talking Greek variables here, then of course, check out some of our educational content on the network, listeners. It'll help you parse that in a little bit more decipherable format. Let's go out to 1 month vol again, or one month skew, I should say, kind of the level most people tend to congregate around. Again, that's looking fairly positive as well, about 6 1/4 on the positive direction this week. Last week, about 5.5 points to the upside. So getting even frothier, getting even more bullish, even more positive bias, shall we say, upside bias at the end of the day. And if you go even farther out, 6 months, kind of a similar story there, not quite as frothy. It was still pretty, it was almost 8 points on the show last week, 7.8, and coming in to start the show today at about a positive 8. So still looking pretty frothy, pretty much across the term structure out there in Bitcoin. And Greg, I mentioned earlier about all this zero DTE phenomena. We haven't talked to you in so long. A lot of this zero DTE phenomena has really unfolded since the last time we chatted with you here on the show. I'm curious for you, where do you fall on all this 0-day madness? I mean, obviously, most of it is still centered around the index options here in the U.S., but there's a lot of talk, a lot of debate, a lot of interest in perhaps carrying that over into the crypto realm as well. So, A, where do you fall on this whole zero DTE thing? Are you intrigued by it? You think it's a useful tool, or is it just pure nonsense gambling in your perspective? And then B, are you one of these people who's really intrigued about seeing more of that flow translate into crypto?
Yeah, so that's a really interesting question. So Deribit actually launched daily options a while ago. And so the ability to trade daily options on Bitcoin and ETH has actually been available. It's not the most popular instrument. Deribit, all traders really like to stick to those quarterly contracts. Those are typically the biggest sources of open interest. So it's a little bit of a deviation from traditional finance. As far as personal opinions on traditional finance, I don't have the answers, but typically where my bias leans is that the more tools and the more ways that people can express themselves and express their opinions, to me, is very attractive. I think that makes a lot of sense. So I'm definitely not against zero DTEs. I think there is potentially a risk of, a portfolio insurance-like crash that maybe happened in 1987. I don't know for sure. I haven't really studied that idea, but I could understand that argument. But overall, if people want to speculate on a short-term basis, that's totally fine with me. I think a healthy market has people buying and selling for different reasons. Otherwise, the market will just gap up every morning and just stay there all day until some news event happened. And I prefer the way that it works. So I'm pro zero DTEs.
Yeah, it's funny. All these people asking about zero DTE in crypto, they don't really realize that it's been available for a while and hasn't really lit the world on fire. So it is kind of funny to see the different viewpoints on them in, let's say, the SPX versus on the crypto space, where they're still trying to gain some traction out there. Are you one of these folks, listeners, who's intrigued by all things zero DTE? Do you want to see it come more to other markets, including crypto? It might be a fun topic for a question of the week out there. Since we're talking about what's going up out there, let's go out to Deribit really quickly, see what's going on the OI front, see if things are rocking and rolling out there. And it may surprise you to say the answer is kind of no, at least from a net OI perspective. This is one of the few weeks I can recall since we've been doing this show where the OI, at least on the call side, which is usually where the action is on Deribit, listeners, is literally unchanged from this time last week. It was 243 a week ago, 243,000 calls open on Deribit right now. this week as well. So kind of interesting. You might expect, given all the upside action we've seen, to see a little bit more flux in that OI to the upside, but not so much this week. And the puts kind of treading water as well. 104,000 puts open. It's up about a whopping 1,000 on the week. So we're still at a little less than 2.5 to 1 calls over puts. Of course, if we continue to see this upside explosion in Bitcoin, listeners, we can expect to see probably that ratio continue to ratchet up. Speaking of ratcheting it up, a lot of you like to play out there in BitO right now. That has been ratcheting up pretty strongly since our last show. It's at about a 17.5 when we kicked off the show today. Listeners, up about 1.65 points. That's a huge move for BitO listeners. And the ADV is starting to respond to that. It's 37,000 now. It's up 15,000 from this time last week. So go figure. You folks just didn't want to trade BitO options when it was sub 15. Now that it's getting a little bit juicier out there, all of a sudden you are reawakening to this product where not that long ago it was averaging about 100,000 contracts a day. So interesting to see how this one literally ebbs and flows with the value of the underlying. About 44,000 contracts on the tape today, so looking pretty frothy. Looking frothier is the vol, 62 on the 30-day BitO vol. That's a lot. It's up about 23 points. That's a huge pop out there on the BitO front. So a lot of you folks are out there slinging things hot and heavy out there today. It's like the most active contract in BitO today are the Nove 20s, nearly 10,000 of those going up out there today. So maybe that shows you a little bit of what's cooking out there as well, even though it does seem like a lot of those are biased to the bid. So maybe interesting action out there. Also, we have the Nove 17 puts expiring this week on the 3rd. 3,300 of those going up this week as well. So looks like paper may be selling some puts to the downside and maybe overwriting the calls to the upside, which is kind of interesting and a little bit of a change of pace from what we normally see. Folks are usually just buying calls with both hands out there on Bitcoin. So interesting to see on the BitO front, a little bit of overwriting going up. In terms of the top positions, the biggest size position in BitO options right now is about 93,000 of the Jan 2025 30s. Those obviously looking a lot better this week than they were, let's say, a month ago. So interesting stuff. A lot of long-term upside paper out here dominating the tape here in BitO land. Mr. Greg, it's been a while since we checked in with you on the ETF front. You mentioned you're adding more Delta One stuff in terms of the, let's say, the CME options and things like that. Are you paying attention to what's going on the ETF options front like BitO, Greg?
Yeah, so we're not covering BitO, but I am excited to cover a spot Bitcoin ETF. I have a love-hate relationship with BitO. I like that it's a U.S. solution and I can trade options against it. I used to like it a lot more. I don't know. It's a hard product to trade because it's sort of a derivative of a derivative that you can trade derivatives on. So it's like CME futures are the underlying asset of the ETF, which is a derivative itself that you can trade options on. And then that thing kicks out a 30% a year dividend, which kind of makes it really hard to price it and trade it. You know, if you're trading long dated options, then you got to assume that the underlying is going to pay out 30% plus the roll cost. It's kind of a beast for sure.
Yeah, that dividend is a monster out there in BitO. Since you mentioned the ETF really quickly, I'm curious, where do you fall on this? You think we're going to see that spots ETF? Some folks are even saying by the end of this year. You think we're going to see that thing in our hot little hands sometimes in the near future?
Yeah, I do think so. I think it's a little bit counterintuitive, but if we assume that government regulators want to regulate crypto even more, to me, this seems like the avenue to do it. So you launch a spot ETF, and then a lot of the market segment starts just trading the spot ETF because you already have your brokerage account set up, or if you're a hedge fund, you already have all this infrastructure in place. It's a lot easier to just buy another ETF than it is to get set up in crypto land to buy crypto. And so it creates a new avenue into the regulated space. And to me, that's probably what makes the most sense from a regulator's standpoint. So I do think it's going to get approved. I don't know anything about timing or anything like that, but logically that makes the most sense to me. And I think a consequence of that is that we'll finally have an uptick in crypto options flow. I think this is really the catalyst for floodgate opening of real size going in crypto ball. So I'm really excited for it. I really hope it happens next to go well.
And we're also excited, listeners, to explore a little bit of the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, time to explore everything outside of the realm of Bitcoin, except for right now when we break down the top 10 assets from a market cap perspective. As you might imagine, looking a little bit frothier here on the top 10 list. Cost you about 8.4, almost 8.5 billion to break into the top 10 this week. It gets you to our old friend Tron, still hanging out at the number 10 spot. Number 9, Doge, just keeping its vice grip on the number 9 spot. Been hanging out there for a while with 9.7 billion worth of market cap. Number 8, it's Cardano, 10.5 billion. Number 7, Solana, 14.6 billion. Number 6, USD Coin, 24, almost just a tick under 25 billion, listeners. Number 5, XRP, hanging out almost 31 billion worth of market cap. Number 4, BNB, 34.5 billion. Number 3, it's Tether, 84.5 billion. Number 2, you know what it is, listeners. It's ETH, 216, almost 216.5 billion. And the big dog, Bitcoin, obviously looking a little bit bigger this week, 670 billion worth of market cap. So closing back in on that 1T level that it hung out at north of for a while before all the fun that's been unfolding over the past year post FTX, listeners. Speaking of fun, we had some fun out there on the ETH front as well. It was shy of 1,700 on the show last week, 1,692. Kicking off the show this week, it was at about exactly 1,800. Puts it up about 108 handles on the week. Of course, in between got a little bit higher. It hit its high on Thursday of 1,865, and the low came right around showtime last week of 1,663. So quite a range out there. Greg, I know you pay a lot of attention to all things ETH. What's been catching your eye out there? Everyone's talking about the Bitcoin run up, but ETH having a nice move out there as well, Greg.
Yeah, I think the really interesting thing with ETH, well, there's two things. There's the vol front and then there's the fundamental front. So on the fundamental front, the regulation really makes sense as why ETH would be underperforming. So regulation is really concerned about things like DeFi and any potential scams or shenanigans going on into that side of the realm. And if we think about one of the biggest value propositions of ETH is EIP 1559, which basically said that for every transaction, a little bit of ETH burn would occur. Well, if the use case for ETH, such as DeFi and NFTs and all that stuff, declines a lot and there's a lot of less participation in the ecosystem, well, now instead of being a deflationary asset because of a lot of uses and transactions, it becomes an inflationary asset as the issuance rate outpaces the burn rate. So that makes sense to me from a fundamental standpoint. And then from a vol standpoint, what's really been interesting is that historically, ETH is just a more volatile asset than Bitcoin, in part because it has a much smaller market cap, so it takes less money to move it around. This year, we saw that vol flippening, so to speak, where Bitcoin vol was higher than ETH vol, both on an implied and realized basis. And now what's really interesting is that that trend has only continued. If I look at the term structures, the at-the-money term structure for Bitcoin implied vol versus ETH implied vol, on the short end of the curve, we're looking at about a 5-point spread where Bitcoin's trading 5 points above ETH, and same thing on the long-term side of the term structure. So that's been a really interesting trend, and I don't actually necessarily see that changing. So one of the biggest sources of paper has been, we think this players in Asia, but they've essentially been this ETH staker who owns a lot of ETH, is staking it for whatever the yield is. I think it's about 5.5% right now. And then they've been selling covered calls against their staked ETH, which is a very traditional portfolio management strategy where you own stocks and sell covered calls on your stocks. And so what's happening is that there's just been a persistent supply of paper selling or optionality sold in ETH. And so dealers have been net buying ETH and just marking down their vols along the way. And so I think that trend probably continues.
And I'm glad you brought that up because that's something we've noticed here on the show and been talking about for a while. When I first saw that inflection point, you're the first person I thought of, Greg. I thought Greg must be all over this. He must be loving this because you're right. ETH has traditionally traded at a premium. It's kind of like small caps to large caps. You expect them to be structurally more volatile at the end of the day. And yet it sounds like this overwriter out here has killed all the vol in ETH, Greg. He's the one. He's to blame. Because you would have thought by now, you thought if this was a structural paradigm that it would have reverted back to the way it was, which is, of course, ETH having a vol premium. But doesn't seem like we're heading that way anytime soon. You're right. As we're coming into the start of the show, listeners, ETH vol last week was at a 40. And coming into the start of the show this week, we're at about a 47. So still getting frothy, are obviously up about 7 points. But compare that to Bitcoin vol, which was at about a 47.5 a week ago, and is closing in on a 52 now. So you could see clearly ETH still trading at a discount to vol out there on the Bitcoin front. So fascinating. When we first started this show and all the way up until recently, it was the other way around, listeners. It was ETH structurally just a more volatile asset than Bitcoin these days, changing its tune a little bit, which is kind of fascinating. That's something you often see. And again, you're not going to hear that kind of stuff unless you're listening to a show like this or maybe reading Greg's newsletter over there out there. It's usually a little bit too deep in the weeds for most people out there watching the crypto space, but a development we've been watching with great interest for a while now. Speaking of the vol on the ETH front, going a little bit farther out, let's go out 6 months on the term structure, listeners. It was almost a 50 last week, about 49.25 coming in to start the show today. It's north of 50, 52.4. So you're talking some pretty juicy vol levels. Again, both ETH and Bitcoin have been north of triple digits in the past, so a 50 is not explosive by any means. But compared to where it was a few weeks ago in the mid to high 20s, that's a heck of a lot of vol. Let's go out on the Skew front as well. It's been fascinating to watch this as well. On the show last week, we were biased to the upside on the weekly Skew. About 5 points was the premium to the upside. This week, it's about the same, about 4 3/4, so not a huge evolution there. Going a little bit farther out, let's go to the traditional monthly Skew, listeners. You had about a positive 4 last week, about a positive 3.9 to be precise. And coming into the start of the show this week, about a 4.5. So still biased to the upside. Looking a little bit frothier to the upside there. And you go out all the way 6 months, it was about a positive 3.9, and coming in and started the show this week, 5.8. So catching a little bit of a bid on the longer term portion of the term structure, which is intriguing in and of itself. Greg, anything catching your eye out there from an ETH Skew perspective these days?
Yeah, so as far as Skew goes right now, it's very much in line with Bitcoin. But what's been really interesting is sort of year to date, or in terms of 2023, both on a realized basis and on an implied basis, the ETH Skew has been a lot more willing to be negative. So we've actually seen times where ETH Skew is negative and Bitcoin Skew is positive. So that's kind of an interesting phenomenon. And then if we look at just on the realized side, spot vol regimes, we've seen both are very close to zero, but Bitcoin is slightly positive spot vol regime so far in 2023 overall, whereas ETH, again, close to zero, but slightly negative spot vol regime in 2023. So what's really interesting to me there is that we're really establishing that Bitcoin is trading like a safe haven, and then ETH is trading more like a risk asset. So Bitcoin is sort of alternative money, and ETH is sort of crypto tech play. And so if we think about that, we could really see the skew of Bitcoin having the safe haven like upside fall skew, and then ETH trading more like an equity or another risk asset, having sort of the put side skew, where puts are more expensive than calls. So that's kind of really been the theme so far this year. And that's kind of something that's really interesting when we're thinking about contextualizing the vol surface between the two assets.
Let's contextualize a little bit of the OI as well. Obviously, listeners, we're at the end of October, so October rolling off the board recently. Expiration always takes a lot out of, usually the quarterlies are the big ones, but the monthlies will take a bit of a hit out there on the OI front as well, and we're seeing that this week with the ETH OI on Deribit coming in across the board. The calls, 2.13 million open right now. It's down about 400,000 exactly from this time last week. So obviously a lot of contracts going the way of the dodo this week. And the puts, 872,000 open. That's down about 53,000. So ETH still hanging out a little bit shy of 3-to-1 calls over puts, which is actually kind of light for ETH out there. So intriguing stuff on the OI front. We'll break down some of the other altcoin in a second. But Greg, I know whenever you come on the show, you always have some interesting altcoin or projects you're keeping an eye on out there. Anything else in the altcoin universe really catching your eye out there these days?
So there's nothing really screaming at me right now in terms of projects. In terms of meme coin trades, I'm very suspicious about X or Elon's Twitter. I mean, they're talking about making a payments platform. I remember a couple months back, the Dogecoin logo became the Twitter logo for like a day or two. And so as far as a speculative meme coin play, I wouldn't be surprised that Dogecoin comes back around for Twitter users in some way, shape, or form. So that's the only sort of altcoin play that I have in mind in my back pocket right now.
Look at you talking up Doge. You loving yourself a little bit of Doge here, Greg? I always knew at the end of the day you were a Dogecoin fanatic. I could just tell that about you, Greg. You're one of the, you have meme coin written all over you.
It's only a short-term meme coin play. I am not a Doger long-term.
You heard it here first, Greg. A hodler for life, he says, in all things Dogecoin. So that's why it's clinging to the number 9 spot. Maybe it's going to start climbing again. Well, he's not wrong to discount Elon's love for that. That certainly is a weird one out there. Weird correlation there. Let's see what kind of other weird movements we can find out here on the altcoin universe, listeners, and we'll tackle some of your questions and get the heck out of Dodge for this week. Solana obviously popping this week, 29.42 on the show last week, 34.93 this week, up over 5.5 handles on the week. So a nice pop for Solana. XRP starting to climb the ranks again as well after languishing post-decision for quite some time in the mid to high 40s. It was 53 cents last week, 57.8, up over 4, about 4.5 cents on the week. So nice little lift out there for XRP. I know XRP fans, they want more. They've been waiting for a long time, but you're getting in increments right now. Greg's favorite Doge, 6.4 cents last week, 6.8 cents this week, up a whopping 0.004 on the week. A Litecoin, 66.86 last week, 68.94 this week, up a little over 2, about 2.08 points. Cardano kicking up a little over 3 cents last week, 26.6 cents last week, 29.8 cents this week. Polkadot, 4.14 last week, 4.31 this week, so up about 17 cents. And everybody's favorite Shiba Inu, maybe ask Greg's other favorite to meme coin, I don't know, getting a little bit of lift out there as well. But we always get a lift from your questions, listeners. So let's tackle some of those now, a little bit of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions. This week's question comes from the interestingly named MC903-30775. Let's just call him MC. MC wants to know, what do you think about the new insurance protocol that allows price quote insurance of an asset ETH in the case of, and he mentions handle at Bumper Finance. And this is one I had to dig into a little bit. I haven't been paying attention to this one. And Bumper Finance is a protocol that they term radically innovative for DeFi to offer, quote, insurance. They offer you 2 different, essentially options-centric approaches to your ETH. You can click the protect button and get some hedging, which is, of course, obviously analogous to buying a put, listeners, and the earn side, which is, of course, obviously analogous to selling a covered call. So it's an interesting protocol. I haven't had a chance to sink my teeth into it. This is why I love the listeners of our network, listeners. You folks are always all over this stuff. So thanks for sending my attention to this. I'm going to start digging into this. Maybe we'll have to get them on the show. Greg, I'm curious for you. Have you been paying attention to this Bumper Finance? And if so, what are your thoughts on their insurance protocol, sir?
Actually, it's new to me, so I'll have to dig into it myself. So I'll have to check it out. No thoughts as of yet.
This is why our listeners are the best, Greg. They always throw us curveballs, which is awesome. They're all on the bleeding edge at the end of the day. If Greg and I both are not familiar with this, then that means it's kind of sailing under the radar, which is interesting. But I like what they're talking about, offering some sort of optionality out there for crypto folks. I'm always a little bit leery of folks who try to maybe couch it in other terms, but I also get the logic behind it. You want to make these things a little bit more approachable, a little bit more accessible to people who aren't options native at the end of the day, if you will. So it's intriguing. I'm going to check it out, and maybe we'll explore it further down the road here on the show. Great question. Who was that? Mr. MC. Great one. All right, listeners, that music means we've come to the end of another journey through the world of all things crypto. It's also going to do it for us here on the network today. Of course, we have more fun coming up throughout the rest of the week, listeners. So coming back tomorrow, of course, we've got pro Q&As coming at you, and then we've got for all you folks who need a little bit of education, good old options boot camp coming up on Wednesday. Thursday, of course, for listeners of this show, This Week in Futures Options in particular should be intriguing. We do touch on crypto there, as well as other assets that have maybe some similar skew profiles to what's going on in crypto. The option block also on Thursday. Friday, volatility views, and for all you pro folks, back again with a little bit of the old options oddities. Mr. Greg, before we head on out of here, where should folks go? Actually, before we even do that, we touched on some stuff you guys have added on the old Amberdata front since the last time we chatted. Before we roll out of here, if you got any hints, any teases of what folks can look forward to from you and the folks at Amberdata, now is the time, sir. The floor is yours.
Awesome. Well, thank you so much, Mark. Yeah, so as far as additional features coming on board, we have a portfolio risk tool that's right now it's in beta, but it's going to be in production in the near future. We also have other exchanges that we're integrating, such as Binance. So really excited about that. And then Binance for options, we already have it for futures and perps. But outside of that, if anyone wants to learn some of our content or follow some of our market commentary, you can find our weekly newsletter at amberDataDerivatives.substack.com. We also have a YouTube channel, which is Amberdata Derivatives on YouTube. And then we also have a Twitter, which is at GenesisFall, which has all of our commentary in real time as well. And then lastly, we also have our own podcast where we interview some of the vol traders in Crypto Vol, and that's Amberdata.io podcast.
I love it. Stepping into my neck of the woods. How you like the podcast hosting role, sir?
I love it. It is great.
There you go. Check it out for yourselves. Amberdata.io, the place to go to begin your journey to the dark side. That's going to do it for us on the network today. Like we said, listeners, a lot of great content coming to you throughout the rest of the week. If you want to check it out, particularly on the pro side, you know where to go. TheOptionsInsider.com/pro, the place to go to learn more. And then, of course, we're back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amberdata. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amberdata delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amberdata eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.